Hey guys, welcome to Chatosphere, another new video. And this video is going about liquidity stuff, how to spot the liquidity, what is liquidity, what type of liquidity in the market we have. So let's go onto the chart. Okay, so this video is going to be quick and in detail. I will tell you the types of liquidity and how you spot and how you can approach, in your trading strategy to approach that liquidity. So first, if I talk about the liquidity, so liquidity is nothing, it's just about the pools of order of buyers and sellers, right? So it's just a large number of order in a some, a specific point. So first type of liquidity, we have the swing points, right? This is the extreme liquidity we are having, like swing points. This is a swing high, this is a swing low, right? So every swing point have a major liquidity orders, right? So have a major order, so that we consider it as a major liquidity point, swing high and swing low. So in every market we have some swing highs, right? See, here we have swing high, here we have swing low first here, right? So this was the swing high and this was the swing low. Market is sweeping this swing high, right? So this market is sweeping this swing low and then moving towards this swing high. Okay, so first type of liquidity we have in the market as a swing point, either it's swing high or either it's swing low. Okay, and the second type of liquidity we can see on charts is a fair value gap. Okay, so fair value gap is nothing, it's just a highest point of, like, highest price of candle 1 and the lowest price of candle 3 in between a gap. So if there is a gap in between candle first and candle 3, in a combination of 3 candle, we can consider this as a fair value gap. Okay, so in easy language, fair value gap is a imbalance between sellers and buyers. Okay, so this is the second type of liquidity on charts we are having. Okay, so first was swing points, either swing high or swing low. Second type is fair value gaps. Okay, and the third type is range high or range lows. Whether you can see in the market, we are having sometime consolidation where price is ranging in one, in one range. See, here we have a range, we have a sweep of this high, and we have a expansion toward downside, right? Then we are consolidating like this, we are consolidating in this range, in this swing high and in this swing low, right? So we are consolidating between in this 2 point. And so this is the another third type of liquidity, consolidation high and consolidation range low. Okay, so see here as well, and this is consolidation high and this is consolidation low, because we have this weekly candle of 17 November. Okay, we have high of this week, we have low of this week, and meanwhile November 24, 1st December and complete December, it's not taking either it's high or either it's low, so it's just consolidating in between these 2 points. So when we have these 2 points as a range, this is a high area of liquidity, right? So we have a consolidation range high and then low. And the fourth type of liquidity I'm talking about, it's a previous candle high or low. But hear me out, this type of liquidity is you have to take care with the higher time frame, either it's weekly candle or daily candle or the bare minimum 4-hour candle. These three time frame have the large orders on their previous candle high or lows, right? So here you can see on charts, we have this candle on 5 August Monday. Okay, so we have this candle high swept and then market moved towards its low, right? Okay, then we see here on 9 September weekly candle, and then when new week open 16 September, it's sweeping its previous week low and moving towards its high. So on the higher time frame, previous candle high and lows are quite important as a liquidity level. Here you can see sweeping its previous high going towards its low, sweeping its previous high and so going towards previous candle low. Okay, here the same pattern, sweeping its previous candle low and going towards its high. Here you can see the same pattern. Okay, also here you can see same pattern, sweeping this previous candle low and running towards this previous candle high. But previous candle point, previous candle high or low, you have to take only with the higher time frame. Either it's weekly, either it's daily, or the bare minimum 4 hour. But my advice would go on daily and weekly, or might be monthly if you are a swing trader or something. Okay, so we have majorly four type of liquidity, whether first thing, swing points, high and low. Second type of liquidity, fair value gap. Third type of liquidity, consolidation ranges, right, where market consolidate and take one side of range and go toward another side of range. And the fourth type of liquidity, previous candle highs and lows. Okay, so now let's see, so how we can utilize these all type of liquidity in our trading strategy, right? So I will show you an example. Okay, so first you have to take care that you have to trade the nearest liquidity from the price. Okay, wherever the price is, you have to see the nearest liquidity available to trade, because you are not predicting the market, you are just observing and reacting the market. Okay, so always just target the nearest liquidity as a reasonable target. Beyond that, you don't know anything because you are not predicting the future. Okay, so whatever you're seeing in chart, just target and trade those points. I will give you the example of my Euro USD trade, which I took on Friday, 30th January. And although I was expecting a large move, but as I said, I was not predicting the future. I was just reacting to the nearest liquidity and the trade area. Okay, so on Euro USD, you will see we have this move on the daily time frame and running this high. Okay, so this was on the daily time frame, and when we close beyond this high, like running this high, so we were in the range of the Tuesday. Tuesday daily candle. This is the daily time frame of Euro USD. Okay, so on Thursday, on Wednesday, I was not expecting anything because this was the monthly high, which was sweep, which was run on daily. Okay, so the motive for the market was complete that time. So I was not expecting anything like a continuation or a reversal, but I was expecting a continue like consolidation. Okay, so on Thursday, on Wednesday, I didn't take a trade because it's not taking its Tuesday high or low, right, was untouched, unswept. So I waited on Wednesday, I waited on Thursday. So on Thursday, right, here you see, we were in the range of this Tuesday low and we were in the range of Tuesday high. So when Thursday this candle closed, okay, Thursday when this candle closed, and the objective was already, was running the high, was running this monthly high, which was completed. So I was expecting a nearest, like I was bullish on this daily time frame because of this move and running this, not sweeping. So I was bullish at that time. Okay, I was expecting a sweep of lows because I was bullish. So in the bullish scenario, market always sweep the lows and running to highs, and in the bearish, seeing market sweep the highs and run towards the low. So when price was there at 1.19709, but I have seen that I was having the Wednesday range as well nearby. Okay, so we were having two downside liquidity. First was the Wednesday range, which is just nearby the price. See, price was on 1.19709 and the nearest liquidity was available at 1.18958. Okay, and the extreme was on Tuesday low. So I was expecting a fall towards this. So my target was to trade this low on that day, on Friday, because I was not sure when market will hit this Tuesday low. I was not predicting, I was not sure. So for that Friday, I was just expecting this Wednesday low and this Thursday low to be sweep. So let's go on 1 hour. Okay, so this was the psychology at that time. And although I was expecting a Tuesday low to be swept, but I was not sure, right? And then for this nearest liquidity, if you see here, let's remove this line. And if you see, we also on the 1 hour, as on daily we were in the consolidation range, also on 1 hour we were in the consolidation range, right? See, this is 1 hour candle of on 8:30 p.m. 29 January. Okay, so we were in the range of this 1 hour candle. As I told you, in this consolidation high and low, what market tends to do oftenly, when we are in a consolidation, market will oftenly, manipulate the one side range and then continue at the original side, because in this, right, because in this move we are bearish. So in bearish market sweep the highs and run towards the lows. In the bullish, it is completely opposite, sweeping towards the, sweeping the lows and run towards the high. Okay, so let's go here again. Euro USD, we were here, right? So I was seeing in 1 hour we were in a consolidation and market has swept out its consolidation high on hourly time frame, and there is just natural liquidity available, that is Wednesday low and this Thursday low, as I was expecting on the daily, because I was not sure on this Tuesday because it's quite far. Okay, so I have traded this on the Friday 6:30 a.m. in the Asia session, because it's quite near and my area of trade was only here. So like this 2 hours candle I have traded, and this give me 1 is to 3. So I just wanted to tell you, whenever you have to spot the liquidity, you have to just take out the swing point or fair value gap or the consolidation ranges, high or low, and you have to see which liquidity is nearest. If we are bearish, we have to see the nearest liquidity available on highs, and if we are bullish, we have to see the nearest liquidity on the lows, right? So we will expect a run towards the another side and a sweep towards the another side. Okay, so that was a trade on Euro USD. If we go on 5 minutes, how I planned my entry, this Euro USD trade I also shared on the my Telegram itself, right? So I was expecting as a fall toward this nearest liquidity, and you can see it. This is a like consolidation in this range. So first, as soon as this range has been swept, I was expecting a fall toward this Wednesday low, as well as I was expecting on daily time frame. So I just simply see, this is a rejection for from this 5 minute fair value gap after this fall, and so I just put my entry on this fair value gap, right? I just set my limit entry on this. My stop loss was on this high and my simple target was Wednesday low. So this was the target and it was quite good trade, as I expected on daily time frame. Yeah, it was around 1 is to 3. So see what I am saying, you just need to see the nearest liquidity available and you have to see the correct one. It's a swing point, fair value gap, consolidation ranges, right, and previous candles highs and lows on the weekly, on the daily time frame. So these four are the major liquidity you have to see. And how to spot, just check out that trend, which trend you are in, either it's bearish or the bullish, and just figure out the nearest point of consolidation or the previous candle highs and low, and just target those points. Just approach those nearest liquidity so you will not miss out the TP, and just wait, right? If you are in a consolidation, you have to wait for one range to be sweep or one range to be run. Okay, so this is all about the liquidity. I will provide more video on it, and I will provide more stuff on the entry time frame or the bias, how to find the daily bias. And one more last thing I just want to tell, what I am telling you about the sweep and the run. When we have a sweep of highs and when we have a sweep of run of highs or lows, so when I am saying sweep, that means market is going toward a point and coming back and close into the range, right? So in this case, when if I say that 26 January week has sweep out this high, that means if go beyond this and close inside this range, it is a sweep. Okay, and if it is not close inside this range and it closes beyond this, that would be run, right? And yeah, I will provide more video on it. if you do have any queries regarding this video, like any liquidity area or any conditions, right? So just do comment, do enjoy the video, do subscribe, and we will see you in next video. And thanks for watching.